Right before we came on, Tony Nash asked Bobby and I when we graduated from high school, and then proceeded to ridicule us for being old for about the next 5 minutes. I'm hurting a little bit, but we're gonna persevere and move on with the show. This is the Future's Edge. I'm coming to you from Chicago. I'm Jim Iuorio. That's Bob Iaccino coming to you from Naples. That's Tony Nash, the president, founder, chief copy boy of Complete Intelligence. He runs the whole show over there. Before we get started, a couple things I want to do, though. Thank you guys very much. This show has been so much more successful than we intended when we started it 2 years ago. All the DMs, all the retweets, all the support you guys give us. It is humbling and we appreciate it. Also, special thanks to our sponsors. First of all, Hardcore Italians. Go to their website. You will not be sorry. It's hysterical. Some of the products there will literally make you crack up. Please make sure you use our promo code for 15% off. Our promo code is FU, which stands for Finance Unfiltered. I'm tired of you guys thinking it stands for something else. And Independence Arc Farms in Arkansas. Grass-fed, grass-finished beef. Farm to table. We are tired of eating from the big multinational food companies sending bullshit processed food around the world. It is time to go local. Independence Arc is the place to go local, which, by the way, right now I think there's a little bit of a back order there because it's such good meat at such a good price. He's a little bit backed up. Get on the list. It is worth it. Tony Nash, how are you, my friend?
I'm good. How are you guys?
Good. You want to apologize to us, or are you going to stick with the whole you old fucks thing?
I'm sticking with it. Look, I have an older brother. I give him a hard time. So
as well you should. We're fine. We're fine with that. Where are you coming to us from? New York?
Houston, Texas. I live just north of Houston, Texas.
We got the big triangle. We got the whole thing covered.
That's right.
I just spent a couple weeks down in the Keys. The first time I've had a multi-week vacation since my honeymoon 33 years ago. Wow. And from now on, I think I spend a month in the Keys every winter. I'm already booking it for next year. And it just gets being in the warm weather just gets your head right. Chicago is a kick to the nards in February. Yeah. That accomplished two things. We're trying to figure out
what it's like to be to be walking around like this for 3 months. Because you're just freaking cold. By the way, I need to point out this is not a black shirt. This is a charcoal gray.
Oh, huge difference. Yeah.
So massive difference, a little bit different hue. I'm sure people who are watching us are noticing that I don't have a black shirt on.
Oh, by the way, I want to mention before we start real questions, you two, you guys got to do cold plunge. When you live in warm climates, you live at thermoneutrality. You don't keep enough brown fat. Brown fat is metabolically active. You guys got to do cold plunge. Tony, are you interested at all? Would you get into an ice tub?
I have a friend who's been trying to get me to do this for years.
Have you killed him?
I killed him. He talks about how he gets up at 4 a.m. to do it. And I'm like, that's great.
Okay. I'm telling you, living at thermoneutrality, I'm not sure it's good for you.
Do it, do you do it every day?
I try to do it about 5 days a week. Because we're recording this earlier than normal today, I'll have time to do it at like 4 o'clock, do like a quick workout afterwards. And then you're starving after that. Because
does it take like 22 hours to pry your nuts out from inside of your body?
Well, you couldn't dig them out with a shovel.
It's like digging a bullet out after getting shot.
I feel like George Costanza every time I get out of that thing. Yeah. You guys know the reference, right?
Yep.
Yeah.
Okay,
yep. We can leave it at that. We can leave it at that. There is shrinkage. People know about shrinkage at this point. Tony, I want to ask you, I panic booked you, and it wasn't panic booking. I just saw something you tweeted about the tariffs. And at this particular point, I really can't remember what it is, but I know it was something trying to talk people off a ledge about tariffs. Now, I'm going to make this a two-part question. Number one, explain to people your stance on tariffs, because everything you do is freaking data-based. Like you're not talking from a political supportive stance at all. This is all data-based, number one. And number two, do you feel like there's a negative ramification? Because I don't, to the back and forth with the tariffs. I'm just looking up at the screen here. We are live. This is not a tariff thing, but Ukraine says they're ready to accept a 30-day ceasefire. It doesn't mean it's happening, but they're ready to look at it and accept it. And we've made a short-term deal with the Ukraine to, again, renew sharing intelligence and supporting them with some weapons. So number one, tariffs, explain it to people. And number two, do you see any ramifications of the sort of back and forth that I think is a feature, not a bug?
Okay, so we've got about 3 hours for this, right?
Yeah, we got 3 hours.
Okay, good. So
you don't have 3 hours.
My first job out of undergrad was with a freight forwarder and customs broker. Okay. So when I talk about tariffs, I talk about it from a practitioner's point of view. When I was 24 years old, I moved to Europe and I was doing customs entries in Dutch, negotiating with EU folks, all that stuff. So I've done it in the US, I've done it in Europe, I've done it in Asia. I understand the harmonized tariff system. I've done that since I was a child, pretty much. And so I don't take the economist's perspective on tariffs. Okay. Tariffs are a tax. Well, technically, sure. Okay. But let's kind of look at it from the perspective of an exporter. Okay. And let's do it from China's perspective. China is a centrally planned economy. They have a closed currency that you cannot convert, they have a currency that's not convertible on a free market, right? They have to get foreign currency to fund their government, to buy things like oil and other things. They have to keep their people working. Otherwise, they will have social instability. Okay. So since at least the 90s, actually since the 60s, when the Chinese were exporting iron and steel to the Soviet Union so they could pay for their own food, but then they exported that food to the Soviet Union, they subsidized their exports. China has 70 years or more of subsidization of exports baked into their central planning model. So when we say we're putting 40% import tariffs on those goods, dumbass traditional economists will say that's a tax. Americans are going to pay 40% more. Okay. What reality shows us is that the Chinese government and the local governments in China and industry associations and a combination of different organizations will subsidize that 40% tariff. They will do that. So if you notice, I think it was last week, Trump said he was putting an additional 10% tariff on China. They thought he was going to do 40% or something like that. They were panicked about 40%, 10%. They said, oh, okay. So what does that tell you? It tells me, okay, we can subsidize 10%, not a big deal. 40%, that would have literally broken the fiscal position of China for them to finance 40% of exports. Because again, if you don't have people working in China, they will kill you. I mean, if you look at the social instability, riots, what that's happened, how history has worked in China and in Russia, particularly, of course, it's worked that way in other places, but social instability means death for the leadership eventually. Okay. So when we talk about tariffs and you have I don't care if it's a PhD level economist, these guys have no clue what they're talking about. Okay. Let's talk about the tariffs from Canada, because that was just announced today. Trump put 25% additional tariffs on Canada, right?
Right.
So what is Canada exporting to us? Well, lumber, they're exporting, auto parts and other things, right? Okay. So we're going to see and there's a commerce study from 2023. So keep in mind, Joe Biden was president when this study was put out by the U.S. Department of Commerce in May of 2023. And it looked at aluminum and steel tariffs and the impact of those tariffs on the price of those goods. We may have talked about this before, but there is about a 6-week to 3-month lag in prices. So we see a temporary rise in prices and then those prices fall. That's when the subsidies kick in. So do I think that Canadians are going to subsidize their lumber exports to the US? Absolutely. Do I think that they're going to subsidize their auto parts exports to the US? Absolutely. Why? Because people get out of work. Okay. People are knocked out of work. And when you see unemployment reports that go above 4, 5, 6, 7, 8% in Canada, and you have Carney, who is now their PM or whatever, Mark Carney won't allow that to happen because he's a former central banker. And he will find a way to subsidize those automotive exports, those lumber exports, whatever, right? And so we are the largest customer of Canada, okay? They can try to use the Trans Mountain Pipeline to export oil and gas to Asia, but they're capacity constrained. They can't export maybe 10 to 15% more on the TMX. but they can't get cash out of Asia because the supply chain isn't there. So they would have to build a larger pipeline, which would take them, I don't know, 3 years or something like that. And by that time, all the stuff will be worked out, right? So, tariffs are a temporary solution to larger problems. And tariffs never happen in isolation. When tariffs happen, people are looking for something else, right? So that's the world we're living in. And people just reflexively go, oh no, tariffs, the sky is falling. But they don't think through the whole environment in which this is happening.
Well, I think they sort of can't, right? And this is why I wanted to have you on right away, and why I like
These guys
panic
are too dumb,
right?
Bobby. I mean, honestly, these guys are held up as smart, but they just can't think in.
You're talking about economists. You're talking, and I agree with you on that. I mean, we all know economists have no skin in the game, so they just say things.
I just want to stop you right there.
Studies that show this, as opposed to actual data, which is what you've experienced and looked at.
I just want to remind you and your viewers, I used to lead global research at The Economist. Okay. So when I talk derogatorily around economists, I used to manage a ton of them. Okay. So I have experience. I know I'm not some dumb guy who's never worked with economists. I actually led global research at The Economist. So I know those guys. I know what they do, and they're not curious. This is what I love about traders. Traders are curious. Traders have to find out why, right? They want to understand the pattern. They want to understand the data. They also want to understand why, because they need to understand the impact. And this is why I think traders are so cool. Of course, there's some dumb traders, but most traders are really smart because they have to understand why.
Yeah, it's one of those. We were just at a friend's house last night for an early dinner. And first thing the husband does, because he's watched me on Neil Cavuto before. So I walk in and he's like, yeah, things are getting a little crazy, huh? Because we had 8 consecutive days of lower prices in the NASDAQ, which we've had, I don't know, Jim, what would you say, 400 times in our career?
In our lifetimes, yes.
Yeah. But the guy said that, and he said, yeah. And I said, it's going to be okay. Jim knows I've been talking about a 15 to 30% drop happening based on the Trump administration doing what they're currently doing.
Yeah.
Okay. And that's not a pat on the back. It's just like, as traders, we look at things and say, okay, what could happen? And we take the emotion out. And this guy said to me, it's like, well, tariffs aren't helping, right? And I went, well, actually, you should watch our show tomorrow, because I'm going to ask Tony this exact question. And I said, what do you mean tariffs aren't helping? He's like, well, I don't know. I mean, they're not good, right? No clue. No clue.
Well, they definitely add some uncertainty, right? Because you don't know how the other party is going to react. And I think what you have on the other side, so I may have told you guys this story before. So in January of 2017, I was in Beijing giving a speech to the largest international think tank in China with Chinese government officials. And I was telling them, these are the policies Trump is going to enact around tariffs and other things. And incredulously, they did not believe me, okay? They were not prepared for tariffs the first time around. They had no idea. They scoffed. They thought there's no way he would do it. And he did it, okay? This time around, I haven't spoken to those guys in years, but I guarantee you they're ready. And what I've been saying since the election is China will aggressively resist the US for 3 to 6 months because they have to for their home market. And during that time, they will work behind the scenes to align with the US. So of course, we're going to see Europe resist the US. Of course, we're going to see China resist the US, because they have media cheering them on. They have think tanks who can't believe how dumb Trump is and how dumb Trump voters are. And so they go to these sources for their justification. But after a while, they realize the guy's not going to change. And they give in because they realize that their economy has to work. So, yeah.
So tell me this, Tony, then, if you were the one who was pulling the levers and you look at the tariffs with Mexico, and I think to Bobby's point about his friends and tariffs are bad, right? Well, the uncertainty around trade policy and economic policy usually reflects negatively in risk markets. That seems fair. Everybody agrees with that.
Sure.
But the tariffs in the end might be a good thing, which I think is what you're saying. Does it something like with Mexico? Does it bother you a little bit that the what we're instituting the tariffs for, the goal isn't always completely clear anymore. It used to be just reciprocal. Now it's about fentanyl. Now it's about the border. Does that bug you at all?
Well, okay. So it doesn't really bug me because since the 1840s, Mexico has not seen itself as a partner of the U.S. Since we invaded, went all the way down to Mexico City, all that stuff. There's this real, anxiousness about the U.S. in Mexico. And I think what Trump is trying to do is say, hey, we want to be your friend, but you're not acting like our friend. And so if you're not going to act that way, we're going to help you realize that whether you want to or not. And I know that sounds stupid, but I live in Texas. We want Mexico to be a good partner. We want Mexico to be safe. We want Mexico to have manufacturing and services, right? And the stupidest thing that has happened in Mexico over the last few years is they've claimed that they would partner with China. Mexico and China are they don't realize this, but they are actually direct competitors. Okay. There is no reason Mexico should cooperate with China. Mexico should cooperate with the US and Canada and Japan and Korea, right? And if we can get that Northern Pacific agreement together with Taiwan, of course, but if we can get that Northern Pacific agreement together, I think that would be an amazing partnership of those countries. So if you look at what Trump is trying to do with energy exports through Alaska, by supplying LNG and crude oil out of Alaska to Korea and Japan, that is one piece in the puzzle to pull Japan and Korea into US orbit and to create a codependency there, right? So if Canada would realize that it's a good thing and they need to cut their non-tariff barriers to the US and their tariff barriers, if Mexico would realize this is a good thing and that we want them to thrive, then this North Pacific agreement could be very powerful.
So do you think there's any element to this at all? Because this dawned on me over the last couple of days. During the 2020 and 2021 period, Canada arguably behaved totalitarian when they shut down the trucker strike. They froze up people's money if you contributed.
Arguably.
Yes.
I would say objectively.
Yeah, right. So anyway, is there in the back of Donald Trump's mind and his administration, it's like if you are going further away from capitalist and republic principles that we've had for so long, then you're not as good a friend to us as you were before. Is that political element at all there?
Yeah, I think it
right?
It is and should be. So I don't understand why that's so hard for people to understand, but you're exactly right.
Thanks, to Bobby.
Yeah. So back to the question, because I was just enjoying your other explanation. I should have realized that I shouldn't bunch the two questions together.
Sorry for going on so long.
No,
guys.
no, it's okay.
Just
That's exactly what I wanted. So I just retweeted that we're live right now, and I put think tariffs cause inflation. Listen to the guy who managed all the economists at the Economist. Listen to what he has to say about it. This is exactly what I wanted to talk to you about. So from a perspective of all the back and forth, what we hear, and I know this, having helped my family run a non-financial business, right? And now running financial businesses as I have, you don't look at the next 2 weeks. Okay. You look at the next 6 to 12 months. And a lot of these, especially on your legacy financial media, the TMZ of financial media is one of the worst at it, but Bloomberg's getting bad too now, where they say, CEOs and CFO, they don't know what to do with all the back and forth every single day and a change in the tariffs plan. That's just crap. It's just absolute crap. So explain to me again from your logistical experience, how quickly something would affect you, or rather, I should say, how long of a runway you would have on things.
Well, okay. So first of all, with regards to kind of the CEO of a manufacturing business, someone sent me a note today saying that the CEO of Alcoa was complaining about tariffs and saying it's going to disrupt his business. Well, if you're the CEO of a publicly traded company, you're always going to be looking for a justification for underperformance in the current quarter.
Remember
right?
the weather being mentioned all those times,
exactly.
like 4 or 5 years ago?
Exactly. So, and if I was a CEO of a publicly traded company, I would always be searching for that potential justification for underperformance. So I can't take any CEO seriously when they say that, because they're looking for, how do they talk to their shareholders on the next earnings call, right? But if, let's say, I think it was last weekend or whatever, Trump said tariffs are going to take place at midnight tonight or something like that. Okay, you don't have any control over that. That's just a bump in the cost. Is that inflationary? Sure, on a temporary basis, yes. But again, over that 6 to say 12-week cycle, those prices then normalize because the subsidy kicks in from the exporter, right? And so this is what was experienced in the 17 to 2020 period. And the administration after that kind of well, they didn't backpedal. They kept a lot of those tariffs in place. This is where I don't understand why the current guy is so vilified, because the previous guy kept most of his tariffs in place. So if tariffs are so bad, why didn't these guys scream about it under the Biden administration? Okay. He kept all of Trump's China tariffs in place, all of them. And so again, if they were so bad, why didn't they talk about it then? Why didn't these CEOs talk about it then? Right. So, but outside of that 6 to 12-week cycle, when prices come back in, and that's really, when you look at a PO, that a company generates a PO, that's typically, say, 2 to 4 months ahead of, depending on vessel rotations and everything else, it's usually 2 to 4 months ahead of when it's going to hit a distribution center, right? So that's the lead time. And so do people really think that these tariffs are going to stay in place in 4 months? Maybe they do, right? But even if they do, again, guys like China, guys like different Canadian organizations, whatever, they're going to subsidize this stuff when it departs.
So here, a quick question is that, so one thing I think is the downside of it, and by the way, the people who are watching too, the fact about what he said about CEOs, that is one clear takeaway from this show. I think that's a really important point, that it's right in their nature to seize on something like that. That being said, okay, our system, because I think the transition from a system, a financial system, an economic system that I did not like, to one that I think is going to be far better. The transitions are rocky, and he doesn't have the 5 years that I would like him to have. He has 2 years. Can he thread the needle in 2 years and shake us out of the malaise that I believe is coming, that is part of the whole transition, and do this all in enough time to not get his ass kicked in the election in 2026?
Yeah, I think there's enough time. And I think that's why there's been this frenetic pace. By the way, guys, my next appointment was canceled. So if you need me to stay, I can stay as long as you want. Okay. But I think there's plenty of time. This is why these guys are running so hard early in the administration. Most administrations would take, say, 3 to 4 months to really get momentum on stuff. But I've been telling people, I feel like this administration has been running almost a shadow government for at least 3 to 4 months before they came into power, so that they could hit the ground running and get this stuff moving, right?
Yeah.
So I think there's plenty of time to get this stuff done.
So I want to point something out that I just noticed, that through today now, and we're not completely closed, but when you're looking at moving averages, and I don't trade moving average crosses, I use them for other things, but when you're looking at moving averages, you need the next day in order to see if, for example, well, let me just talk about what I want to talk about. We just had a daily death cross on the QQQ. All right. Now, let's not panic about the death cross, because the death cross, if it is going to actually extend the losses in the Qs, okay, it's going to rally up first. That's happened somewhere in the range of 80% of the time after a death cross. You get a death cross, and then you go rally to somewhere in the range of the actual cross, and then it fails from there. And that's the confirmation of the extension. So we got the cross yesterday. Today's let's call it today's weak rally in the NASDAQ, continues to let those two longer end moving average continue to cross over.
Probably 50 and 200.
Yeah, I use the 50 exponential and
Oh, I mean, yeah.
simple, but it almost it almost doesn't matter.
Got it.
So what we're likely to see, if the death cross is actually to portend more losses, you're likely to see about a 3 or a 4% rally from where we're at now, and then a failure from there. And the reason I bring that up is because from the all-time high through yesterday's close, we were down almost 13%. From the all-time high through yesterday's low, we were down 13.3%. Okay. I'm going to call that a victory for my call of 15 to 30%.
Sure.
But I do think there's more. And this is my question to Tony. As I mentioned a little bit earlier, my whole point of calling for this big drop, by the way, after that big drop, I think it's a multi-decade rally, was twofold. It was based on success in the early going in the administration, which was going to mean a lack of success in a stock rally. There was going to be, it was really going to whack it. Jim pointed out to me a while back, and then a lot of our guests confirmed it, that Trump wasn't really looking at stocks. He was looking at yields, right?
Yep.
And he said him and Besant were focused on yields coming off. And then Jimmy has some more theories that he can explain to you himself about where yields are going. How do you feel about stocks right now? And again, I know you're data-based, but maybe you have some data to call upon, or do you have your own gut feeling about where they're going to go from here, or no?
Well, can I mention specific companies?
Please.
Sure.
Okay, so let's look at the ridiculous of like Palantir. Okay. Palantir has been trading at 450 times earnings or something like that, right?
Yeah.
And and I know that's not the perfect way, but it's an interesting, quick way of looking at a stock, right?
Mhm.
They're effectively a consulting firm, and people will argue this against me all day long, but they're effectively a software-enabled consulting firm.
Mhm.
So let's look at a company like Accenture and look at the valuation of Accenture. It's like 25 times or something, right? So we have had companies like Palantir who are trading at almost 450 times, and we have Accenture that has a much broader network, broader client base, all that sort of stuff, that's trading at a small fraction of that. And I think we're in this period, guys, where people are looking at valuations and going, I'm not really sure about that, right? Now, a Meta is a very different thing. It's a software firm that it looks amazing, right? And so I'm a big fan of things like that, you know, but Palantir is one that for me has been the poster child of this excess. And I don't own any of it. I don't have any calls on it. I don't own any Meta, any of that stuff. I don't talk about companies that I own, but this is kind of where we are. In terms of yields, I was just explaining that to somebody in my office earlier today. You know, when yields come down, long yields come down, which is Besant's biggest challenge, right? Because he has to take all this crap that Yellen left, take that short debt, transition it to long debt, and push the yield down, right? So if we can get the 30-year down, you know, 7,500 basis points, housing values start to come up again, right? There is a wealth effect among most people, not among the small, not among the small number of people like you guys who trade stocks every day, but among the broad population. And then people will put in a pool or buy a car or start spending real money because they have equity in their house, right? And so, you know, when you talk about Trump wants to take down the long bond, it's for that broad-based wealth effect. It's not for necessarily the narrow wealth effect of traders and investment bankers and people with a big 401k, right? So that's why that's critically important. But it's a very difficult thing that Besant has to do.
So I have a quick question, because here's the thesis. Well, this is the evolving thesis that Bobby was referring to. So I do think there's some credibility in the theory that Trump is perfectly fine with ushering in a recession on the short end. And one of the reasons he is because it'll force rotation from stocks into bonds, lowering rates, and then they can term out the debt. That there's $9 trillion of debt coming due in 2025. This is what he's talking about when he says we might have to deal with short-term pain, which, by the way, every time I say that, I like to put a caveat on it too. I feel some guilt saying that we have to deal with short-term pain, knowing full well that the three of us will not have to deal with short-term pain, and some of you are watching will. But I do think it's important to mention that. But you think that that's what's happening, Tony?
Absolutely, I think that's what's happening. Yeah, because
then here's the follow-up then too. Then let's move over to Chinese economy, because we said that the Chinese are going to take some punches from us in the trade war. Copper is still performing very, very well. And this question is going to go to both of you. Is copper looking beyond the China weakness, and is that why it's rallying? And what the hell is up with China? Is that just a commodity super cycle thing or no? I mean, with copper.
Bobby, what do you think?
Bobby, you go first. Yeah.
Actually, I was ignoring you guys because I was reading a comment from Edward McKernan that I think is very, very intelligent. So ask me that question again, and then I'll read his comment.
No, copper. You know, we're talking about a trade war with China, which we all agree would damage the Chinese economy. Copper still keeps going kind of through the roof. Is that just I kind of think of it as, if we're pricing in 2.8 to 3.2% inflation, it's better to be long stuff, and it's part of the commodity super cycle. Is that the long and short of it, you think?
Yeah, no, I think that's a big part of it. I also think the weakness in the dollar is a big part of the snapback we saw in copper. 8 straight days, the dollar in aggregate, or the dollar index, whichever way you want to look at it, has been falling. It's been falling the most against the euro currency. But there's something else with copper. Copper is a big military component. And Europe is, whether they're being forced to, whether they're actually going to, they're going to start spending on military. I was looking, it's kind of a sidebar to this. We could talk about this as a separate thing. I was looking for stocks to post on the new platform that Jim and I are going to be posting on soon. We'll be announcing something about that in the near future. And one of the charts I liked was Gilead Sciences, whatever, nothing to do with copper. Another one I like is Northrop Grumman. And another one I like is General Dynamics. And they use industrial metals. The dollar's weaker. Tariffs on steel and aluminum driving those up, in which case industrial metals go up in sympathy. So I just think there was a lot of reason to cover any shorts in copper that people had. And then the inflation story is probably the part 3 of that 3-headed monster.
So Bobby, a quick question for you before we get back to Tony, and it involves the AI thing too. Would you rather be long right now, the Mag 7, particularly with a slant on the AI names like Nvidia, or a basket of copper, gold, silver, platinum, palladium right now for the next year?
I'd rather have commodities.
So would I.
Yeah,
so would I too. Tony, back to the technology thing though. Those names, you mentioned Palantir, you didn't mention Nvidia, because their revenues are exploding sensationally. When you look at Nvidia, are you interested in them at these levels?
Yes, I'm interested in Nvidia. I don't think we're at a point where we see a valid competitor for Nvidia. And, you know, Nvidia has been priced to perfection for a long time, but, you know, with this drawdown, is it an opportunity? I just don't know yet. So I would say I like Nvidia a lot. I'm not really sure when to get in.
So I just want to add to that now from Edward McKernan, who follows Jim and I and comments on a lot of our shows. He says this: in a slowing economy, the supplier will eat the tariffs to keep factories running. Something Tony just said. From my semi background, now I'm not sure what he means by that. By the way, I'm watching the
semiconductors. He was in.
Okay, so I'm watching the X stream here, and it seems to be buffering. In case it's buffering for anyone watching this and is able to hear me, we're live on YouTube as well, in the Futures Edge Finance Unfiltered channel. But it also could be my connection. So anyway, from my semi background, I see a different trend. Nvidia prices up and memory prices are staying up, which means AI demand still strong. Combined with Doge cutbacks and deregulation, I think we will see much faster disinflation with tech capex growth. Is this a productivity story to you guys, what Edward is saying here?
Yeah, absolutely. So when we had this Chinese model that we all heard about that came out 2 months ago, right? Mm-hmm. Part of the reason that was interesting is that approach is 6 times more efficient than the ChatGPTs and Groks of the world. Okay. So if it's 6 times more efficient, then we need 1/6 of the processing capacity to do the same work. And so what he's talking about makes a lot of sense to me. And this is when you asked me the Nvidia question, this is what's going through my mind. If we're going to have these LLMs who are using 1/6 of the processing power, I'm definitely enthusiastic about Nvidia, but is the volume of processing going to be required that have been baked into the assumptions. At this point, I don't know because I don't know enough about how quickly that stuff is going to come on.
Interesting.
Again, if this is buffering for anybody, go to YouTube, because again, I know that Elon was facing a lot of cyber attacks today and a lot of actual attacks today. So go ahead.
Okay, so Tony, I got a question for you. So, because now you turned me on to Claude AI. So you always, they're the ones who know more about the cutting edge AI models. Grok has been impressive to me.
Very good.
Yep. Yeah, I think Grok is very good. And now, so do you think now, like I'm still long Google. I have been forever. And you know the reason I'm long Google too, we've talked about it. I believe it's a right arm of the CIA, and I think they're going to be supported by that too. And by the way, if you guys think I'm an idiot for saying that, take the other side of the debate. I'm not talking about you two here. Anyone out there, I will destroy you on this debate. Just to be clear, Google the CIA, and the CIA is Google. That's the reason I'm long stock. But now, do you find yourself? I guess this goes to both of you. When you have a question to search, we'd always just search on Google. Oftentimes now, I search the same question on Grok. What do you guys do?
Exactly.
I don't use Google anymore.
Yeah, I don't use search engines at all.
I don't use search engines.
I even, to your point, I even typed into this was a ChatGPT one, because that's the one I have on my phone. I have that in Perplexity. And Tony, I'd be interested which ones you like. By the way, your Claude recommendation from about a year ago
loved it.
Was fantastic. I typed in where in Naples is the best happy hour, and it gave me a bunch of suggestions. Now, they weren't the best ones, so it's got some work to do on that. But even for something like that, where I would normally do Yelp or a Google search or something like that, it was just habit because I ask it so many questions. And I mean, again, living in the world we live in where, privacy is completely gone, I get nervous about it sometimes. I really do.
Of course.
I asked a question about my dog one time, and it asked me my dog's name, and I told it. 8 months later, I asked a question about a particular dog toy for a gift. And the thing actually said, "Is Callie having problems with a broken tooth? I can help you on that too." And I was like, "This is fucking weird. It's fucking weird."
Yeah. So in terms of, I think we're approaching a point where the capability of all of them is very similar. Where Claude used to be the best one for writing, and Chat was the best one for researching, and Grok I didn't use at all. With Grok 3, it's actually really amazing. The research on Grok 3, I think, is the best. Now, Perplexity does a combination of models, which is great, right? And so, I don't have anything against any of these models. I just think we're approaching this kind of point where they're all similar. And so, it reminds me of, and I'm not as old as you guys, but I'm old enough to remember when Yahoo and Google and Ask Jeeves, and there was the search engine battle, right? And then Google won, right? And so are we approaching that point where, you're looking at which LLM to use and which one is going to win? Because there's only going to be one that wins. And so it's the one with the most money. And so when I question, OpenAI just raised a ton of money at a valuation before all of this Chinese stuff came out. And I just don't know if it justifies the valuation that it did from 3 months ago. This is the question that I have. So will they get the cash that those investors committed? I just don't know.
Can I ask you both the question?
Yeah, shoot.
You think that, Grok is doing so well because of its direct link to X? Because contrary to popular belief, studies, at least lately, maybe there's new ones, but the last ones I looked at have actually shown that X is right about 50-50 between right-leaning and left-leaning accounts. So do we think that it actually is giving better, more researched answers because of the access it has to all the data that Twitter had? And maybe things like ChatGPT don't reference Twitter and X files, for lack of a better phrase?
I can't. That's going to be for Tony, because I don't know how it works. Tony?
Yeah, I think that's part of it, because we're guys like us and traders and other people, we're so used to finding out information right now. Remember, a year ago, ChatGPT didn't have a model out that was connected to the live internet. And so just over the last year, we've all gotten spoiled by these models who are connected to the live internet. And if it doesn't, who would use that? That's stupid, right? So this is changing so fast. And ChatGPT doesn't have a social engine. So they're going to have to figure out how they can get like up to the second information about things, because that's what Grok does.
So Tony, when you look at the last time we talked was probably, I don't know, Bobby, would you guess 6, 8 months ago?
Yeah, something like that.
The landscape has obviously changed in the AI world. And we talk about like, what is AI going to be powerful enough that it has a productivity boost that could be a weight on inflation? I think I'm already seeing that the answer to that is mildly yes. When does it become resoundingly yes?
2027.
Okay. And that's just, you're basing on that on the exponential changes of the models, correct? And the accuracy and the fine tuning.
Yeah. So in 2021, I published a chart that talked about kind of how labor would go on a continuum. And I can tweet that out and tag you guys today. But, it talked about the Great Resignation. And really, I talk about when do really white collar and mid-level management get affected. That's 2026, 2027, when that really starts happening. And, my company, what we do can replace a lot of corporate finance jobs, the FP&A work, the internal auditing work, these sorts of things. We're getting to the point where we can replace the jobs of people who make healthy 6-figure incomes, right? Nobody wants that. Like nobody in corporates want it, because they love living in Excel and doing the same shit they did 5, 10 years ago, right? But the reality is coming to the point where companies have to be efficient, and that's sooner rather than later. And that's not a bad thing. People always find other things to do. There are always things to do. So I'm not worried about that, but that is coming, I think, 2026, 2027, where we start to see huge deflationary impacts based upon AI advances. And I mean, I hate to say it, but it's going to happen in salaries. So people who've been used to making $150,000, $200,000 a year, they're going to be making 125 or something like that, right? This is part of the reason we have to have interest rates come down, because people won't be able to afford their mortgages if their salary's been cut by 50 grand or something.
And that's
you go, Bob.
Well, that's a theory that people have said, is that this particular recession that we may be heading towards, AI is going to be a big factor potentially in helping us just accelerate out of it because of the productivity gains. And many guys that I actually believe, not just economists, have said the only way out of this inflation spiral we're in is productivity.
Yeah, that's how it happens, right? It's the labor capital, it's core inflation is really services wages, right? Or super core inflation is really services wages. So how do we stop that super core inflation spiral? You automate, right? So it's the capital labor tug of war that we always go through. And you can only get deflation by automating. So that's for the capital owners. They have a large investment up front. They depreciate over a period of time, but the incremental cost is very, very small.
I wanted to add something here too, because when we look back at Alan Greenspan and we give him credit for slaying the inflation dragon in the early 80s, late 80s, I think that is some misplaced attaboys. I think a huge part of that was the internet came online, which was one of the hugest deflationary things. And people sometimes forget about the disinflationary effect of technology. Think of just like the automobile. When nobody had cars back in the early 60s, you'd have to walk to 1 or 2 stores. As soon as you had the car, you had pricing power. That's where big box stores started to come around in the 70s and 80s, because you could drive and stock up on things. All technology at its core can be somewhat disinflationary. Where do you put the AI revolution compared to the actual advent and the traction of the internet that happened in the late 80s for productivity?
I think we're at the pets.com phase. And so, we have all these different, effectively, LLMs are effectively search engines. I know they're much more sophisticated than that, but they're search engines that synthesize and really do the research for you and give you answers. So we're at the kind of pets.com phase where you have 100 different search engines, you have 100 different kind of internet ideas, all this stuff, right? And we're going to start seeing some of these companies that have, $50 billion valuations be bankrupt in 2 years.
That makes sense.
I've got a couple of viewer comments I want to say. Widge said, loved calling out the Alcoa CEO. His commentary seemed very disingenuous. Sterling says, hi, Bob and Jim. That's nice to see. And then I've got a riddle from Edward McKenna, but I want to read this Nathan Dolan question first. Tony, Jim, and Bob, can you all discuss how awful the shutdowns of 2020 were for supply chains and how and if they have recovered?
Can I take this one first?
No, please. Yeah, you were smiling too big.
This makes me question what Milton Friedman has said and what we've all believed. The quote that inflation is always everywhere a monetary phenomenon. I think that's only 60 to 70% right. I think that this above 5% inflation we saw was strictly related to the supply chain shutting down and the fragility which was exposed. I think it's an enormous thing. That's why Bobby and I have been arguing over the last year. Yep. Like, I think inflation is going 2.8, 3%. I don't think it can get back to 4% because I think that needs a supply shock to accompany it. But to your point, it was enormous, and it was an enormous part. It was like the monetary policy, which, injecting $7 trillion into the economy, was like just stacking tinder and stacking kindling, whatever it was. And then the supply shock was what lit the fire. That's not that radical, is it, Tony?
No, it makes sense. So I ditto everything you just said, Jim.
Okay. I think out of it? Go ahead, Tony.
I think the second part of that question is, are we out of it? Well, I think from a, say, physical logistics and manufacturing perspective, yeah, I think we're out of it. But in terms of the money supply and fiscal aspects of it, I think Doge and these other things are undoing it. And I think there are a lot of people who don't like that.
Bobby, can I ask you a quick question?
Yeah.
Because Tony mentioned Doge.
Yeah.
You mentioned defense spending of Europe probably having to shoulder some of the bill, which would mean that we wouldn't have to shoulder some of that bill ourselves. So is the lower yields we're seeing, particularly on the 10-year, are they reflecting a lowering supply of bonds? If we are going to really save $1 trillion in Doge, if we're really going to cut the defense budget by 8%, which was what Trump floated out, coupled with the fact that Germany has to come back, which, by the way, a quick side note, somebody published on Twitter X the other day, said, I'm from Germany. So let me get this straight. The Western world is encouraging Germany to build an army, march through Poland, and challenge Russia. Is that what I'm hearing? And I'm like,
that's
wow.
Actually really funny.
But anyway, so is the lower yields we're seeing reflection of less supply, or is it just the demand part that I talked about earlier with the recession looming?
No, I think it's the demand part now. I think there will be less supply. And I've been thinking about this since you brought it up. And I want to comment on the inflation question. Then I want to go to Edward's thing here. But I think it's more reflective of the demand side right now, because I don't think that when you're looking at a Treasury Secretary who is concerned about bringing yields down for the obvious good that comes from that in the short term, recovery of housing, you're also talking about a president who has always wanted to refinance all this debt at lower levels, right? So why would they cut issuance if they want to refinance all the debt that's been issued at higher levels? At lower levels, you and I have complained, mostly you, because you called it out, about Janet Yellen front loading all that stuff on the short end of the curve, right? For the lower yields as well. But I think it will be that, Jim. Like, the more I thought about it, I'm like, Jimmy's not wrong. I just think the timing is off, sort of like my 15 to 30%. Jim and I, Tony, are very good at saying what's going to happen, not when it's going to happen.
Yeah, that's fair.
And then on the inflation
I just want to
side,
disagree with you, Bob.
Let me say this on the inflation side real quick, and then Tony, go ahead and disagree. I think when you break it down, the supply chain broke. So what happened? More money chased fewer goods. It's still monetary. And I think that's what Milton Friedman would say. You know, the goods weren't there and the money was still chasing him.
He alive? Let's get him on the show. No, he's dead, isn't he?
No, anyway. I wish that guy were alive. Thomas Sowell's going to die at some point. And that's going to be. That's going to be.
I disagree with you.
Go ahead, Tony.
Here's where I disagree with you. Europe is not going to arm up.
Mm-hmm. I think you're right. I think
they're not going to arm up. They're going to talk about it, but when they sit down and do the math and they realize they can't take a 6-week vacation, they can't have free health care, you know, all that stuff, they are not going to arm up.
So you're saying they have to cave, right? They have to cave.
Of course.
Yeah. The second part of that is we will then continually support them militarily. That's what you're saying, right?
Yeah. Well,
we're not going to have no one supporting them, right?
Come to the table to ask for that,
yes.
right?
Yeah. On some level, yes, but they're not. All of the aggressive discussion that's happening in Europe right now, they're not going to. you're not going to see Danes going to Ukraine to fight, or whatever, French or whatever. And the French aren't going to deploy nuclear weapons in the,
I have clients in France. I can't say what I want to say.
No,
but when the Danes come to fight, they are called Vikings. When the Danes come to trade, they are called Danes. I know this from the 800 wars in England, right?
I want to read Edward's riddle because I don't think I don't think he's asking for a response, and he's been so interactive. I want to read it. And then also Jay Soloff, I'm pretty sure he's trolling here. Okay, Jay's a friend of ours. He's also a Keynesian, so you can already guess what the trolling was. Edward says, here's a riddle for you and Jim Iuorio. If the consumer economy is expected to be weak based on comments from Delta and deregulation accelerates as food and oil fall, we should see falling rates. But what do long rates do if AI is still strong and not a bubble blow off as Wall Street, hang on, I forgot to hit the show more, as Wall Street says? A revisit to 1990s bond market may be the scenario.
So two days after the time clock where I lose an hour of sleep, you're going to ask me that question where there's
I don't think it was a question.
Moving parts. I lost Bobby after 2 moving parts.
Literally, Edward started that with riddle me this. Okay.
And Edward's a really smart guy, which right now is exposing his superior intellect to me right now because I barely could even follow the question. Tony, you got anything?
Yeah. No, I think you've got, all of the things that he outlined in the first part of that riddle line up to lower levels of inflation along with the technology facilitation. I think that's what we get.
All right. Soloff, who's a great guy. He's a friend of ours. Really, really sweet guy. Unfortunately, I'm not going to say this. Here's what he said. Greenspan, I'll say, unfortunately, he's a Chiefs fan, but here's what, that's not what I was going to say. He says, Greenspan spent too much time reading Atlas Shrugged and not enough time studying Keynesian economics.
Ooh, I hope he's trolling because I prefer Ayn Rand's version of economics to Keynesian economics.
Tony, what do you say to that?
Atlas Shrugged is too long, and
it's boring as shit, even though I agree with it.
Any time spent reading Atlas Shrugged is too long.
I read 20 pages and it was the cure for insomnia. Bobby, normally I have a little clock on my Riverside thing that tells me how long we're going. So the clock went away. Is it time for me to wrap?
Yeah, it's just about time for you to wrap.
Let me just say one thing. Road to Serfdom is better than Atlas Shrugged.
Love Road to Serfdom.
Very readable, much shorter, worth your time.
By the way, I don't think...
says only partially trolling. But
okay. Yeah, but Road to Serfdom is just, it lines everything up so perfectly. Like if you are anywhere agnostic on economics, if you're anywhere confused, read Road to Serfdom. Then read Stephanie Kelton, the Oppenheimer of our time. Read The Deficit Myth also, and then compare the two and see which one seems more logical. Spoiler alert, it's going to be The Road to Serfdom by about a factor of 1,000. Tony, tell the people where they can find you.
Can find me on X at Tony Nash Nerd.
It's not fair. Tony Nash is not a nerd. But anyway, go on.
And my company is at completeintel.com.
You have coffee. Tell them about your coffee.
Tell them about the coffee. Yeah.
I roast coffee and I have a subscription service. So the coffee brand is called Nerd Roaster, and you can find it at nerdroaster.co.
I have tasted the coffee. It is fabulous. And as you guys all know, Bobby and I are somewhat coffee snobs. We like good coffee. I actually like shitty coffee too, but I like good coffee a lot more. I like all the coffees. But thank you very much, Tony, for being with us. Thank you guys again. You guys are what makes it successful. Otherwise, we'd just be shouting into a void. All the questions you guys gave, the interactions, it is beautiful. We love it. We live off these things. Remember what our goal is. We were with Legacy Media for 20 plus years, each of us. We found that in Legacy Media, you always were at the whim of some overzealous producer or a sponsor who didn't want you to say this or that. We might be wrong and our opinions might be bullshit, but they here on this platform are our honest opinions. Also, thank you to our sponsors, Hardcore Italians. Use our promo code to get 15% off, but use the promo code FU. I know I'm talking fast because I don't want to, Tony, we've had enough of this time already. And Independence Arc Farm, grass-fed, farm to table. Go follow them on Twitter. Go on their website. You will be surprised how cheap it is. I'm Jim Iuorio coming to you from Chicago. This is the Future's Edge. Bobby is Iaccino from Naples, and Houston, Texas, Tony Nash. Thank you, guys.